Hello everyone, my name is Vikas. Hope you guys are doing great. And today, StatsCan has released the latest CPI inflation report for the month of May. We are going to dive deep into this report and talk on the numbers in detail, and also going to discuss on what it could mean for the Bank of Canada's future actions. So let's get started. And as per the report, the headline inflation has risen to 2.5%, which is 0.3% higher than the expected rate of 2.6%. And when compared to the previous month of 2.7%, it is a 0.2% increase. If you dig deeper into this report and notice where the prices have been increased, you would notice the services have gained significant prices increase, especially tours and travel and air transportation, with an increase of 10.4% and 2.3% respectively. Grocery prices have been increased month over month as well. Price for food purchase from stores rose 1.5% on a year-over-year basis in May, following a 1.4% increase in April. The monthly increase in meat price was largely a result of high prices for fresh or frozen beef amid high demand and tight supply. But one more significant factor in increase of inflation is shelter. Shelter takes a big part, or I would say weightage, in the CPI inflation report. To be honest, unless we do some like fundamental structural changes to increase the housing, this is going to be really problematic to get the shelter inflation down. And I have been following Sean Fraser, who's the Housing Minister of Canada, and watched his latest interview with CTV News, where news anchor basically grilled him on two contradicting statements, where Prime Minister says he don't want existing prices to fall, and at the same time wants housing affordability to increase. Well, coming back to latest CPI inflation report, what does all of this mean for the Bank of Canada interest rate cuts? Based on today's report, it's going to be hard for the Bank of Canada to cut the interest rates, as Bank of Canada primary focus is on inflation. And also we need to understand the inflation not only trends in linear downwards direction, it keeps fluctuating. Significant decision can't be made based on one bad report or one good report, right? But currently market is expecting less chances of interest rate cut. If you look into TMX rate expectations, the probability of rate cut in July has fallen down to 40% from 60% before the release of inflation report. The only other thing a major thing that happened, or I would say the good thing that happened based on the CPI inflation report, is the Canadian dollar has been falling drastically from past few months compared to the USD. Now that will become a little stable, or expected to become stable, because now the market is expecting less or like no interest rate cut in this coming June. That could kind of stabilize the Canadian dollars when compared to the USD exchange rate. And if you like this video, please share with your friends, and thanks for watching my video again. Keep encouraging, please like it and subscribe. Thank you so much. Bye.